Most people want wealth. Very few want the process that creates it. And that gap is exactly where fortunes are made. My name is Paul. I wasn't born rich, I wasn't lucky, and I didn't win the lottery. Yet by 35, I built a multi-million-dollar net worth through boring, repeatable investment decisions. Today, I'll break down the exact mindset and structure that took me from a beginner to financial freedom, and how you can build the same system step by step. Let me ask you something honestly. Do you want money or do you want control over your life? Because real wealth is not cash, it's optionality. Most people secretly think like lottery players. They wait for a miracle, a shortcut, a viral trade, a once-in-a-lifetime opportunity. But money doesn't reward hope, it rewards structure. I'm not a magic fairy handing out $1 million. And if that disappoints you, good. Because it means you're ready to build something real. Without the right mindset, even a big win destroys people. I've seen it happen again and again. Money without strategy leaks fast, and leaves you right where you started. What you need is not a lucky bet, but a system that compounds over time. Long-term investing is boring, and that's why it works. Today my investments buy me time. Time to build businesses. Time to create videos like this. And no, I'm not selling you anything at the end. Relax. One of the biggest traps for beginners is noise. Every week there's a next big thing screaming for your attention. Bitcoin. Penny stocks. Short selling. Hype everywhere. Here's the truth. You'll never be an expert in everything. And the faster you jump between strategies, the faster you lose money. Consistency beats curiosity in investing. I experiment, but my core strategy stays boring and stable. I only invest serious money into things I fully understand. Anything else is gambling. I'm not a financial advisor. I'm a businessman sharing what worked for me, nothing more. Everything starts with disposable income. You can't invest dreams, you invest dollars. And more income gives you more options. People in their 20s and 30s are told to cut life to the bone. No fun. No coffee. No trips. I disagree. Yes, discipline matters. But misery is not a financial strategy. Focus most of your energy on increasing income, not just cutting expenses. Learn valuable skills. Build side income. Create something scalable. A salary alone will not get you there. Business and investing grow together. The more you earn, the more you can invest. The more you invest, the faster you grow. But higher income doesn't mean higher lifestyle. Lifestyle inflation kills wealth quietly. Control it. If you were happy earning $40,000, and now you earn $100,000, that extra $60,000 is your power lever. Save it. Invest it. Before investing, eliminate high-interest debt. Credit cards, payday loans, bad student loans, they drain your future. Paying them off is a guaranteed return. Next, build what I call a freedom fund. 3 to 5 months of living expenses. This fund buys you options when life hits hard. Only after that do we talk about investing seriously. And the safest place to start is index funds. Index funds spread risk automatically. Instead of betting on one company, you own small pieces of hundreds. Diversification without complexity. Mutual funds promise to beat the market. Fees quietly beat you instead. Over time, low-cost index funds usually win. For long-term investing, I prefer simple, low-cost providers. I also diversify with international exposure and bonds as I age. Not financial advice, just my approach. Most of my wealth, however, came from real estate. I like assets I can touch, control, and improve. My first property was small and cheap. It rented, it appreciated, and over time it multiplied my capital. That changed everything. There are 2 types of real estate investors. Those who chase appreciation, and those who build cash flow. I'm firmly in the second camp. If rent doesn't cover the mortgage, I don't buy. Cash flow first. Everything else is speculation. Individual stocks are powerful and dangerous. Liquidity makes them tempting. But ignorance turns them into traps. If you don't understand the business, don't buy the stock. Simple rule. 0 exceptions. I analyze stocks in 2 ways. Numbers and narrative. Financials tell you what is. Vision tells you what could be. Finally, private business investments combine capital with experience. This is where networks become assets. Knowledge opens doors money can't. Wealth is not one decision. It's a series of disciplined choices made consistently over time. If this video helped you think differently about money, hit the like button. It tells the algorithm this matters. Subscribe if you want more long-term thinking and real strategies.